So, if you want to hear about real estate investing versus stocks, then this is the video for you. So, my name is Davin Sundvik with the House Hacker Tribe. And like I said, we're going to be doing a comparison video. I don't know if you've noticed, we've been shooting out a lot of videos this last week. My wife is not editing right now due to her crazy schedule at work. So we're just going to provide more content and a little bit more volume and keep the videos simpler. So hopefully you appreciate it. And let's get right into the topic. So, when we're comparing real estate versus stocks, we have to compare it on a variety of different factors because your financial situation is completely unique. And so, even if I say that stocks are better or real estate is better, really it does boil down to, it's going to be better for one type of person or another. So, we're going to go through a line of factors and we're just going to see kind of who wins along the way. So, the first topic is liquidity. Now, real estate has a little bit of a disadvantage on liquidity, except for when we're talking about taxable accounts. So, if you're trying to liquidate a taxable account like an IRA or a Roth or a 401k, that you might have to wait till you're like 59 and a half, 60 years old, just depending on the laws at the time. But with real estate, you can liquidate it at any time, whether it's an investment or personal use. And so you don't have to keep it in a tax advantage account to get the tax advantages of real estate. On the other hand, if you do keep your stocks in a brokerage or you're above the age, the retirement age, then you'll be able to have instant liquidity with your stocks within one day. So we're going to give stocks a point for liquidity because if you're not concerned about the tax ramifications, you could have maximum liquidity with stocks over real estate. The only disadvantage is maybe the real estate market is down, or the stock market's down, and so you don't want to liquidate something for a bad price. Moving forward to our next topic, which is tax advantages. Now, both stocks and real estate have tax advantages. When you live in a home, any profits that come from it, either $250,000 for a single person on the capital gains tax and $500,000 for a married couple on capital gains, there's an exemption on capital gains as long as you've been living in the property 2 of the last 5 years. So that is a huge tax break for people who want to have instant tax advantages from living in their home. But in the brokerage side of things, on the stock side of things, if you own money in a brokerage account, that's going to be taxable, where your Roth IRA or your 401k is going to have some different tax benefits, but the money's going to be tied up for so long until you're in your 60s that essentially the account is pretty much illiquid. So I would actually give the tax advantages towards the real estate side of things because you can get instant tax benefits, and you can even get tax benefits on an investment property by writing off depreciation. So you're essentially getting cash flow in without having to pay income tax, which is not too bad. Moving forward, we're going to talk about inflation. Now, both of these are high performing assets. So I'd love to give both of them a point because I personally own stocks in my portfolio and I own real estate. So I love the fact that real estate and stocks both outperform inflation if you're doing it right. And so this kind of is a really hard toss up. But I will say that there are times when inflation actually causes the stock market to go down. And usually the only thing that causes the real estate market to go down is either when a bubble pops or massive interest rate hikes, which is the whole point of an interest rate hike, is to slow down inflation. So if you want to be protected from inflation, I do think real estate is a little bit better because as prices rise, I would say as a stock investor that I would want to own real estate because as prices rise, well, I'm going to get a raise at my job. And then after that raise, what am I going to do? Well, I can buy more stocks with that raise. And if inflation is insane and everybody is worried about how they're going to make their rent, and I've got a fixed rate on my mortgage, well, and stocks are going down because inflation is sky high, and what's going on is people are spending less money, and people are constricting their budgets, and so these companies aren't making as much profit, and the prices of these companies are going down. I would actually give it to the real estate side. Now, obviously, I do believe you should invest in both, but for inflation protection, I would say real estate does give you a little bit more direct protection. For return on investment, stocks are going to have a little bit more return on investment if you're just talking about cash versus cash, because if you put all your cash into a real estate asset, there's going to be a lot of negative cash flow from your taxes, your income tax, and a wide variety of things that cause the asset to perform very low. But if you finance real estate, the ROI gets much higher. And so if we're just talking about cash in, stocks are going to perform a little bit better. And so I do have to give it, for simplicity, if you just want a really simple passive thing to do, stocks is going to take that. The next thing is time. Real estate takes a little bit more time to manage. And so stocks definitely take a little bit less time, or at least they should. If you're getting into day trading, that's going to, again, boost your ROI a little bit, but it's going to take that time advantage away. So I would say stocks have a time advantage as long as you're not day trading. And then that last topic I want to cover is leverage. So with stocks, there's a little bit of a disadvantage here. So you might be able to get a margin account, or you can buy options, but typically people that finance their stocks or buy on margin are putting themselves at a much bigger risk than people who leverage real estate. The financing can be way more creative with real estate investing. You can even finance, there's some loan programs out there. You can finance like 99% of a home. And so, that's a 100-to-1 ratio with your money. Now, that's a little bit extreme, but even at like 95%, which is a typical conventional loan, that is a really, really good ratio. A 20-to-1 ratio with your money is going to way outperform the stock market in the short run. And like we said, if it's a personal residence, this is all high performance tax-free money. So that is our versus video. Like I said, we have a bent on this channel. We're the House Hacker Tribe. We talk about real estate investing. And so yes, we're going to have a little bit of a bent towards real estate. But hopefully you can see why, because within a wide variety of topics, there are certain people that want a little bit more liquidity, want instant tax benefits, have a little bit more time on their hands, and they need to see skyrocketing results, and they're willing to take bigger risks to do that. Versus on the other side with stocks, some people don't qualify for the loan. Sometimes people don't have the time to put into it. Sometimes people just want something that is tried and true, or they have different stock strategies that they want to diversify into. And you're going to get much better diversification with the stock market than you will with one real estate asset. So this is our video. If you have any comments, please comment down below. We love your feedback, whether it's a question or a recommendation, or even just to tell us that we did a good job. All of it is welcome. Leave us a like and a subscribe, and have a great day.